Hello, everyone. Welcome to another edition of Skyboundcapital's podcast series, Under the Macroscope. And I guess my first duty is to say, welcome back. We've had something of a self-imposed sabbatical, but it's good to be back and broadcasting through this podcast series. And before I introduce today's guest, there's a picture behind me, a painting by a British artist called Hazel Sohn, which many people have asked about when they watch the podcast series. And for me, it's a reminder of the need for balance. I have to admit, I don't always get it right in every aspect of life, but there it is, those children on the balance beam and trying to achieve some balance. And let me use that to introduce our guest, Skyboundcapital's Chief Investment Officer, Theodore Qi Shou, who we haven't spoken to for some time. But the reason I've mentioned balance is that it's good to see, Theo, that there seems to be a little bit more balance, a little bit more equilibrium in your part of the world. We're talking to you from Shanghai. You are shortly going to return to the Hong Kong office where you usually spend so much of your time. But even a simple movement like that has not been possible over the last while.
Thank you, Matt. You're absolutely right. I think people probably have read in the news headlines about the China's reopening, how China gave up its zero COVID policy a couple of months ago. But on the ground, the changes people are experiencing, the effects on their day-to-day lives are a lot more profound than these news headlines. And back to your point, I think, first of all, travel definitely has been restored, and travel is so busy now that you can see most of the domestic airlines and domestic trains are not only full, they're increasing prices because of the demand. And this is something that we not only haven't seen in the past 3 years, probably we haven't seen in the past decade. And that really showcases how strong demand has been. And of course, there's this rebound from the rock bottom, like people really haven't traveled extensively for too long. But I think it also showcases the robustness of domestic Chinese economy, how it has really been normalized, and how, as I said, it has been affecting everyone's day-to-day life. And personally, as you mentioned, I can now freely travel among different Chinese cities, across border, to mainland China, outside of mainland China. And this does not only have impact on my personal life, but also businesses in general.
Yeah, well, I have to refer back to this concept of balance, because often the reporting out of China that we are able to get where we are doesn't have that level of balance. So what you're implying here is a very swift return to normality, if we can call it that. I'm not sure what normal is anymore, but what you're saying is that demand is up in various aspects of the Chinese economy, and how soon do you think that is going to spread back into Chinese influence on the rest of the global economy?
I think if I put a timeline on this or time frame on this, it will be within weeks. And most likely, we are already in it. We are already experiencing the big reflection effect of China onto the remaining of the world. And speaking of sabbaticals, I think for many people, China as a market, as a country, was very much in isolation for the past 3 years. I'm not saying it was entirely isolated from an economic perspective. No, it continued to deal with all its major trading partners, etc. With that said, though, the volume was not comparable to pre-COVID level. And coupled with some other external factors, China has been challenged in many ways. And now, speaking of restoring relationship with trading partners or restoring its activity level, I think China is flashing back. So literally, when I said within weeks, I'm probably being too conservative. I think it is more appropriate to say China is already fully restored.
Theo, the story of 2022 in the US, across most all of Europe, certainly even down here in South Africa, where we're based, was rampant inflation, constantly rising interest rates to levels unseen in the last decade in many countries. Can you try and compare that situation, those macro forces that we've experienced with what is going on in China specifically?
That is going to draw a very, very interesting comparison, because when people are reading about global economy today, very often people are drawing a conclusion that the global economy is so unanimous, like everything is highly synchronized. Therefore, the effects, the phenomena that you see on the economic front will be the same or similar across different markets, which is so not true when it comes to China, because on one hand, the isolation we talked about for the past 3 years actually put China in a very, very different position compared to the developed market peers, in the sense that when you guys were experiencing the inflation and the central banks trying so hard to counter that inflationary pressure, China was quite the opposite. The Chinese economy was experiencing some weakness. The weakness is a relative term compared to how robust it was in the past. And therefore, for the Chinese central bank, the top priority is not countering inflation, because inflation isn't an issue here. If we look at the CPI indices in the past quarters, we are looking at numbers like 1% or 2%, which is definitely not comparable to the 10 or 10 plus that you see across Eurozone. And therefore, the job of the central bank now is not about tightening, like hiking rates, again, what you see in the UK, in the US, but more about potentially loosening and trying to stimulate, boost the economy from a monetary policy perspective. And that is already taking place. That is already what we are seeing in the market. And take last month, for example, January 2023, the Chinese central bank was possibly launched the largest ever efforts of quantitative easing, in a way. And a huge amount of liquidity was injected into the system through commercial banks and various mechanisms to be fed into ultimate businesses. And we are going to see that efforts continue for quite a while.
I guess one could argue as well that with the policy of QE and lower production, it's the perfect storm for inflation to thrive.
Absolutely.
So, Theo, I want to drill down into one specific sector. You love talking about the tech sector. You manage a fund in this particular sector, and there seems to be, again, a massive difference between the tech sector in China to perhaps anywhere else in the world. It paddles its own canoe, so to speak. It goes in its own direction, largely because it's catering for such a massive domestic market. But how are things looking in the tech sector in general?
You're right in the sense that I think tech in China could be quite decorrelated with the rest of the markets, with particularly their larger US peers. I think I will usually compare China with the US because of the market depth, because of how big those markets are and how easily a tech firm can thrive in those markets. So there are definitely a lot of similarities where you can see in between the Chinese tech guys vs the US tech firms. But you're also right that the China tech is still very, very different in many ways. for example, if we look at or focus more on the hardware front, US is more the patent owner, the IP owner, whereas China is the not the slave, but the worker who actually works on the ground in the factory, producing all the products literally that you see, ranging from your mobile devices to your VR goggles and your EVs, the Teslas most people drive outside of the US are made in China. So that's the hardware front. And as I said, you can already see the big difference. And in terms of the more soft end of the tech space, internet or software, I think we also see large differences. For example, many China large tech giants were undergoing big pressure moments in the past 2-3 years because the government was not really cracking down on them, but the government was giving them heartaches, and many of the tech firms in China were trying to behave, and they probably missed the exponential growth they were so used to in the previous 10 years. And that also set them back a little when it comes to comparing them to the US peers. But I think it is also very similar if we compare the tech landscape with the monetary policy I was talking about. Because China is so different, and the Chinese tech firms were so different that they were conservative for most part of the past 3 years. They were not growing fast, but at the same time, they didn't need to go through the big layoffs of people that we see with the large US tech guys nowadays. And now with the reopening of the Chinese markets, but more importantly, I guess that the reopening of mind of Chinese government when it comes to regulating these tech firms, I think the Chinese tech guys in general are ready for a more offensive period. This is the period that they can grow at a faster pace than what they experienced in the past 3 years. When it comes to a change of mind, I can give you a real life example. China recently revamped its IPO regime. In the past, it was more approval based, meaning a company that wants to go public needs to be approved by the security regulator in China. And now China has changed it to a registration based, or basically, as long as you apply and you meet all the basic requirements, most likely you will go public without getting the approval or without approval needed. It doesn't sound like too big a change to outsider or people who are not investing into the sector, but it will affect a lot of Chinese tech firms, which in the past were primarily eyeing US and Hong Kong as the listing destination. The change of IPO rules in China actually enabled many of them to be potentially looking at China, mainland China, as the primary listing destination. And we're talking about very, very large firms like ByteDance, Shein, that many people outside of China are already using as well.
I'll tell you what it sounds like to me. We often hear economies and countries referred to as sleeping giants. And what it sounds like to me is that there's been this self-imposed slumber, shall we call it, with some of the strict regulations that have been in place. But there has been a very large wake-up call. Does that sound right?
Yeah, right to me.
Well, Theo, it's always great to get your perspective on things that are happening in China, and we look forward to staying tuned to you and your presence on the ground there. We're delighted that you've now got this revitalized freedom of movement so that you can give us more insights from across China and Hong Kong, and indeed some of your travels to Japan and other areas in the region. So Great to catch up with you. We look forward to the next one. Thanks again, Theo. Don't forget, you can get all editions of Under the Macroscope on Apple, Spotify, and the Google podcast platform for Android. And all editions of Under the Macroscope are available in the media and insights section on Skybound Capital's website, which is www.skyboundcapital.com. Until next time on Under the Macroscope, I wish you all balance.